23rd Global Conference of Actuaries, my colleague Yash Jain caught up with Amit Jhingran, who is the MD and CEO of SBI Life Insurance. Do note this is his first interview after taking over as the MD and CEO. Yash began the conversation by asking him on the issues that the insurance industry is facing around margin contraction and premium growth, and if these issues will continue. Listen in.
If you look at our figures and if you look at the industry figures for last 3 to 5 years, you will see that the SBI Life is consistently growing above the industry average, whether it is 3 years CAGR or 5 years CAGR. And we continue to do this in the first 9 months also.
Correct.
The results of first 9 months are as per the guidance provided by us at the end of Q1 and Q2. Despite increasing ULIP contribution in our product mix, it right now stands somewhere around 61%.
Correct.
Has not affected much as far as our margins are concerned, because SBI Life is the lowest OPEX operational cost company in the industry. Correct. So some of this ULIP products also, within the interplay of premium paying terms and all, have maintained our margin in the Q3 also.
You of course started by talking about how you've outperformed the industry in terms of whatever metric of CAGR you want to look at. Going forward, do you expect your things like your low OPEX, your strong distribution to continue to help you to outperform the industry on premium growth as well as margins?
So as far as Q4 is concerned, if you consider industry figure and the SBI Life figures for the last quarter, you will see that we didn't have that very high kind of tax adjustment effect last year also.
Correct.
So with that lower base, we are very sure that we will show the consistent growth in Q4 also, and the growth rate will be much better than the industry, which will also have a base effect of large March sale in last financial year.
You've cued me to my next question, sir. We've seen the January numbers for SBI Life. They look strong. What is your expectation out of February and March? And as far as Q4 is concerned, you spoke about it, you'll have a very strong base because of the rush of savings policies which we saw last year. Do you still expect positive APE growth in Q4?
Our Q4 last year was not as strong.
Correct.
Because our ticket size is smaller, we didn't get the advantage of that 5
larger
lakh
savings policies.
Larger saving policies in the last financial year. So we had a normal Q4 last year, and with the consistent growth figure, you already talked about the January, and you have seen our growth numbers, say around 15% in January month also, which usually is a lean month for SBI Life, but we maintained a 15% in January also, and I am sure that going forward, February and March will also be on the same trajectory.
So about 15% for Q4 is
plus,
what you're expecting?
Yeah,
okay.
15% plus.
Okay. What kind of shift do you expect further from the current point in your product portfolio towards ULIP? And then do you still expect to maintain margins around that 27.5%? Is that sort of the understanding at the company level?
So as far as product mix is concerned, we definitely want to sell some more of non-par and protection products, because protection is also need of the hour. And in the recent past, we have introduced 2 new products in the protection also for with the higher ticket size and all. And in the current quarter, in the future also, our focus on non-par and protection product will continue. As far as margin is concerned, you should not read too much into one quarter, 0.5% here or 100 basis points there. Our guidance for the future is being around the same 27-28 kind of percentage, and with our kind of cost structure, we are sure that we will be able to maintain that.
Okay. One question, you spoke about non-par book and protection book. As of now, out of your total product portfolio, what is the share of non-par and protection? And with the focus that you have, let's say by FY25, where do you see that share moving up?
So as I already told you, 61% approximately is the ULIP book.
Correct.
So remaining 39% is non-par and protection. Of course, non-par is more than protection there, and protection book is somewhere we would like to work more. So going forward, say 13%, 14% protection product, and remaining non-par and par products we'll continue to focus on that.
Okay. I want to understand a little in terms of absolute growth in two segments. One is protection and second one is annuity. If I speak about growth, not about share but about growth, then what kind of growth are you expecting in FY25 as far as both these two segments are concerned?
So if you look at our 9-month number, our protection growth overall was good. However, within the protection also, the group product showed a larger growth, and individual protection premium was like flattish.
Correct.
We would like to work more upon the individual protection side and provide enough within the product mix of the product itself. And your other question was about?
In terms of annuity.
So annuity, you had seen that we grew at around 35%.
Yes.
And in Indian financial condition, in Indian economy, the importance of annuity where enough social services are not there, social benefits are not there post superannuation. Annuity is something which we need to work upon, and we will continue to work upon. NPS within the annuity is one segment again which holds immense potential, and as NPS matures, the outflow into the annuities from NPS is going to zoom, and SBI Life is well positioned to take advantage of that.
What is the impact in terms of quantification that you see coming on your APE growth and margins because of surrender value? So if it comes in the way it has been proposed by the regulator.
So the draft guidelines are out, and there have been wide-ranging discussion amongst the industry and with the regulators also. Going forward, I am sure regulator will take care that the short-term as well as long-term buyers of the policies are taken care of in an optimum way, and also the industry's concerns are also taken care of. At this stage, I would not like to quantify the impact on SBI Life in particular, but being the lowest cost operator, I am sure that we will be able to manage our profitability in a much better way in coming times also.
The parliamentary committee report, it spoke about reducing GST on term insurance products, which is very important. Right now, the GST is about 18%. Before GST came into play, the taxes totally were about 15%. What is your view, what is SBI Life's view in terms of on an important product like term insurance protection, what is the ideal rate of GST?
No, see, I cannot comment on the ideal rate of GST, but you yourself have said that GST is a major cost component for term insurance, and term insurance being need of the customer in India particularly, where protection is very low. Any tinkering with GST rates on the lower side will definitely help push up sales, and I really welcome the suggestion from the parliamentary committee, and I hope it is implemented soon.
If I could take the liberty of just asking for a yes or no on this question, are you actively on the lookout for inorganic opportunity?
No, I will not comment on that right now.
Okay. If I could just add one question to it. There are, of course, reports which suggest that Bharti has spoken to SBI Life, that is for Bharti AXA Life Insurance. They have, of course, acquired the 100% company now. They want to exit the insurance business, and they are in discussions with SBI Life. It will be a good asset. Of course, they've been into the business. It will add to your value also. What are the conversations? Does the asset look interesting to you at this point of time? We're not going into where the discussions are, but does the asset look interesting to you?
See, discussions in the industry keep on happening, but I will not like to comment on any particular transaction at the moment.
Okay, that's the management of SBI Life. But